Ever wondered how you can make your money work for you while you sleep? Imagine a world where your bank account grows effortlessly and you're sipping your morning coffee knowing that your investments are doing the heavy lifting. Today we're diving into the world of real estate investment, uncovering the potential for passive income that lies within. And hey, if you're new here or you've been with us for a while now, welcome back to Passive Income, where we turn dreams into streams of income. You see, real estate stocks are like a roller coaster, with highs and lows that can make or break your investment journey. The recent decline, down 25% in 2022 and another 12% last year, sets the stage for a potential upswing. Well, in 2008, REITs faced a 42% drop during the financial crisis. Surprisingly, they rebounded to become one of the best-performing sectors, delivering a 200-100% return over the next 6 years. Fast forward to today, real estate stocks jumped 20% in just the last 2 months of the year, more than double the overall market return. The question is, could this be the beginning of a multi-year rally? So what does this mean for you as an investor? Understanding the historical resilience of real estate stocks after downturns can provide insights into potential future gains. If history repeats itself, this might be an opportune moment to consider real estate stocks for your investment portfolio. Now let's explore the next key point. Consider GLPI, a gaming and leisure property represented by ticker GLPI, offering a 6% dividend. Despite the industry's challenges, GLPI has shown resilience with triple net contracts maintaining 100% occupancy. Why does this matter? Diversifying across sectors like gaming, healthcare, and infrastructure mitigates risks. Understanding sector strengths and challenges empowers informed investment decisions. Also consider the impact of interest rates on the real estate market. Now, interest rates may sound like financial jargon, but in the real estate world, they're game changers. As interest rates doubled over the past 2 years, properties faced higher expenses, especially for those needing to refinance. It's like a domino effect. Higher interest expenses wipe out cash flows, and owners are left with no choice but to let properties go back to the bank. This, in turn, impacts valuations across the board. The Federal Reserve is expected to make rate cuts soon. Imagine it as the plot twist that could kickstart a new boom. Private equity giants like Blackstone are already raising billions to scoop up distressed properties. This anticipatory wave of buyers might drive property values higher even before the actual rate cuts. Understanding the cyclical nature of interest rates and their impact on real estate values positions you to make strategic investment moves. It's like anticipating the next move in that chess match. Let's now shift our focus to the resilience of rental properties. Now, if you're finding these strategies exciting and valuable, make sure to hit that subscribe button and ring the notification bell. You don't want to miss out on future insights and strategies for turning your passion into online income. Let's discuss rental properties. They're not just income generators, but also game changers in real estate investment. Arrived Homes offers dividends ranging from 3 to 8% on rent, plus potential price appreciation, transforming the rental property landscape. Invest in homes through platforms like Arrived for hassle-free cash flow. Each investment is structured as an LLC, ensuring direct ownership and steady dividends. Diversify your portfolio with stable rental properties amid market uncertainties. Now, as we've explored the resilience of rental properties, let's zoom in on specific sectors within real estate. You see, each sector presents unique opportunities and challenges, and understanding them is key to making informed investment decisions. So let's dive into the potential gold mines within healthcare, data centers, and infrastructure. Infrastructure, particularly cell tower REITs like AMT and CCI, is yet another sector worth exploring. With the expansion of 5G networks and increasing connectivity demands, these REITs are poised for steady growth. Their stable income streams and potential for capital appreciation make them attractive options for investors seeking reliable returns. Now, let's turn the pages of history to understand why past performance can be a valuable guide in the world of REITs. Back in 2008, when rates faced a staggering 42% drop during the financial crisis, few could have predicted their triumphant return. In the subsequent 6 years, they not only recovered, but delivered an impressive 200-100% return. Fast forward to today, and we've witnessed a 20% jump in real estate stocks in just the last 2 months of the year. Now, why should this matter to you as an investor? Understanding the cyclical nature of real estate stocks and their historical rebound after downturns can guide your decision-making. Now that we've learned from the past, let's address a crucial aspect: navigating challenges in specific real estate sectors. Now, let's step into the world of office spaces and unravel why caution is the name of the game in this sector. Office spaces, impacted by the pandemic, face declining occupancy and lease dynamics due to remote work becoming the norm. For investors, being selective is crucial. Avoiding office REITs like SL Green and Boston Properties and focusing on resilient sectors like healthcare or infrastructure may be wise. So if you found this video informative, please hit the like button and subscribe for more financial insights to join us in revealing the secrets behind fortune. Only here on Passive Income, where we turn dreams into streams of income.